Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, February the 21st, the year 2020. Let's talk trading. It's time for the weekly wrap up. But before we get to the weekly wrap up, just a little reminder, and I hope that on every trade that you made this week, you had your stop loss in place so you didn't lose any more than you were willing to lose on any one single particular trade. Now, boys and girls, fellow traders, of course you know these videos are for educational purposes only, and your results may differ from mine. You should also be aware that trading is very, very, very risky. You can lose all of your money. That being said, if you need trading advice, investment advice, or financial advice, seek it from an accredited financial professional. Somebody who has a certificate on the wall that says they're a certified, accredited financial professional. That way, when you take their advice and you lose your money, you know you got your advice from an accredited financial professional rather than some guy with the funny name who puts out YouTube videos, or you read something on the internet somewhere, or got something in the mail, or you saw something on TV. Okay, disclaimers out of the way. If you're just tuning in, all the weekly gaps filled this week, and you notice here with the dollar yen, it shot above last week's high. That single line crossover there was worth, right now, if you're still in that trade, you're up 156 pips, but we're 52 pips off of the weekly high, which means there was a potential to make 200 pips on that trade. We're 297 pips above the yearly open. So if any of you took that crossover here, you're up. And for the month, we're up 331 pips from the weekly open. And there was an explosion out of that day's range a couple of days ago. But you see here today, we pulled back. Right now, 49 pips pulled back off of that high. The monthly range so far is 391. The average range is 292, so we've exceeded that by about 30%, 33%. So it's really up. And you can see here on the weekly chart, once again, that weekly buy zone, huge profit to be made. It looks like today is setting up like it's going to be an inside bar, so next Monday should be interesting. But you see we've pulled back here. Once again, we broke out of an inside bar from 5 days ago. You see it was broken out a couple of days ago. Nice trade. The range, okay, for today we've got 1, 2, 3, 4, 5, 6, 7 pairs over 100. Because range is everything. If price doesn't move, you can't make any money, right? Here we had a yearly H1 highest open, a daily H1 highest open, and the monthly D1 highest open. As you can see here, earlier today you had an opportunity to get in on that yearly H1 highest open, and prices continued down. Price also took out the pivot point, and pivot point was well below the zone here by about 16 pips. So you would have ignored the buy zone and looked to the pivot. Now, of course, if you did this yesterday, you might have missed out if you weren't in a trade already, because the pivot was below the daily open. So if you didn't take the that buy zone trade, you would have missed out on a big run. But that's how it goes sometimes. So if you're a pivot trader, that's just how it is. You wouldn't have gotten in. The rat zone here, once again, we've got 71 pip range. Plenty of range for the rats. And you can see here, green rats picked up here. Green rats picked up again. Red rats got the feast a second time here. or actually technically this was the first time red rats got the feast, because when price hit here, there wasn't enough range, but we came here, came back into the rat zone, and came back out. And so right now you'd be up about 30 pips if you had taken that, with a potential of a lot more had you taken this trade and punched out, which you should have, because if you take a red rat short and it gets into the green area, it's telling you it's time to get out, especially if it retraces 20 pips out of the green rat zone. Showing the pivot here taken out, and we never, I think we took out the weekly pivot, earlier this week. So the weekly pivot was taken out. It was last week's weekly pivot that hasn't been hit. So we hit today's. You can see here 2 missed pivots from Thursday and Wednesday. And on the weekly, we've got a missed pivot still from last week. And so once again, I just show you the dollar yen. Next week is the last trading week of the month. So if you want me to switch up to another pair, let me know. Or I'm thinking I might even change up the format. I might pick one day out of the week and really dive into one of these systems for the new people who haven't watched. And then I think I might even pick one day of the week and dive into the dashboard, because I get a lot of questions about the dashboard and how to use it and how to set it up, things of that nature. So stay tuned for that. Okay, once again, price action, boys and girls. Of course, some days are better than others. We opened between 0 and 10. Price didn't stay there. It left. And I'm going to be back in a bit. Okay, fellow traders, I had to take a pause for a second there. Anyway, price action, as I mentioned before, it opened between 0, 0 and 1, 0, did not stay there. There was a break to the north and a break to the south. You see it even came back here, it didn't stay. So simple price action trading. Wick zone, in and out. Once again, statistics on your side. About 70 to 80% of the time, price will not close in the wick zone. So it will leave the wick zone, and it did. Horizontal line trades, we didn't really have any off of this chart. You can see here, since I started with this profile here, we got a short trigger, and there was about 8 pip potential here. But once again, simple horizontal line trading, nothing difficult. You can see here at the tick level, we've oscillated about 4 pips up down. Nothing to write home about, but it's after 1 o'clock. I bet the New York big boys are still out there at lunch. You see the daily open actually hit the lower ATR zone, but you can see here we had traded above the weekly and we barely touched it. So here you can see daily open down into the lower ATR zone and back out of it. There was profit to be had here, or you might have even taken profit here at the open minus half the minimum ATR, which was ATR 13. And just so you know, if you haven't tuned in, the way this indicator works, it looks at all the ATRs between 2 up until 14, and one has a minimum value and one has a max. It's not the minimum. These numbers in the brackets, that's just the ATR, 3-period ATR, 14 period. Some days this might be 2, some days it might be something else. And it's just kind of interesting that today, you can see here on the ATR for the daily, the max was 13, but on the weekly, the max was 14. So I hope that's clear, because some people get that confused. In fact, one guy goes, yeah, I put mine between 20 and 24 and it came up 20 and 23. So I had to explain that. Let's see, we've got a higher high. We've got a on the weekly and a higher high on the monthly. So no inside bar there, but so far on the daily, lower high, higher low. You can see here, that looks like we might have an inside bar to trade come Monday. You can notice all of these highs and lows that have been taken out previously. Right now, we're bracketed between 76 and 62. So one of those is going to have to be taken out because price is not going to stay within this zone. So if there's something that you can probably see, all these different things I show you are basically price between two levels and price exiting one of those levels, the other level, or both. And that's pretty, because in trading, price goes up or down. So it's either going to go up past here, or down past here, or possibly both. And that's just the way the market moves. You hear all these people talk about sideways markets and trending markets and ranging markets. I mean, everything, if you take the all-time high and the all-time low, price is ranging between those two. So, I mean, once again, don't get caught up on the concepts. You got to focus on what's reality, like highs and lows and opens and closes. That's the reality. And here, just looking at the Virgin Wick zones with the bid with the ask candles here showing. So right here, you see we had price going down, and then price came here, crossed above the bottom of that ask candle, and then price went up. And here you see price crossed below the bottom of this bid candle here, or actually price crossed below the peak of the bid candle, and it came down. And price crossed below the valley of the ask. I'm sorry, the ask candle, not the candles here. These are called them bid candles because they represent the high bid and the low bid. But these other candles from the indicator are the ask candle. So that was the high ask, and this was the low ask. And so you can use these to determine whether or not to enter based on the peaks and the valleys. So here on the 5-minute candle, you can see the valley of the ask. And so if price gets above it, then the buying will start. And so you can see here, price, the ask got above it, so the buying started. So, fellow traders, that wraps it up for the week. I hope each and every one of you had a profitable week. And I hope you have a fun and safe weekend. Take some time off from the charts. So when you come back next week and you sit down in front of your trading platform, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.